Good evening, dear listeners, and today we will start to discuss a probability trading approach based on level. I will start to show you slides now, and this first picture is our theme. Just a minute. Okay, here you need to understand that speculative trading is tight work with math and not a prediction. Only if you have math advantage, you can generate profits. Other way, without clear math, trading will be like a gambling. So let's start. It's very important to realize how huge investor can gather his big position. And there are three ways to do it. Nothing else in the world is invented. So it's range against movements and not the most clear way, not the most clever way. The third way is by market. And let's look each of them. But firstly, I will draw you schematically. What it does mean range. Range, it's a kind of situation when nobody wants to sell, no panic, but huge investor needs to buy these shares. In this case, huge buyer hold instrument between two levels before he will gather position between this price and between this price. At last, when he gathered position, he will break up the level, showing that price is ready to rally. How it happens? For example, here we have price 15, here 20, and he need to gather big position. So he can buy here 3,000 shares and here sell 1,000 share. For example, it can be another volume. Of course, if you are using horizontal levels, the most levels will be here. But it doesn't matter if you good understand price movements. And what happened with price? When price fall to this level, he tried to hold it because he is interested to buy average price, for example, 17. And before he will gather his position, he's ready to hold this price because he's not interested to buy price here, here, or here. He has only one interest, to have to gather average position by 17. Okay, what next? When he gathered his position, he can break up level and to show another participants of the market that price ready to rally. Why? Because his interest that this share will rise. He will earn. What happened in practice? Here a lot of sellers, because they see the same level, try to sell. And huge buyer simply can buy here position and we receive twice price movements. Thanks for this buyer and thanks for sellers, short sellers. A lot of stops reacted here. And we often see how price became very strong movements. It's range. Against movements, this variation, you also need to understand. It's a situation when everybody panics and are ready to sell by any price. It can be new situation, maybe special, pursued by someone's interest. We can't know it. It can be quarter report and so on. But for huge investor, it's simplest way to buy shares in such a variation because almost everyone sells. How it looks like. Then we see aggressive sellers and sometimes price stop falling and new rally begin. And as I said, it's the simplest way to gather position for huge capital because everyone sells here and he can buy in simplest way. And the third way, buy market. Unfortunately, it's not a clever way to gather huge position, and in the next screens we will understand why. So it's an example of range when the instrument consolidated more than a year. Price 1,820 and 2,135. You see here clear range. And then you know that S&P 500 rally almost to 3,000 till now. Next screen. So, and the next example is when exists short-term panic on the market. Here does not exist any fundamentals for panic. Economic numbers are quite well. I can speak that close to range character, but American-China relation, rising interest rates make a panic driver. And once again, smart money holds the price at level 2,317. Here you can see this level. And began new era of rally. If you will analyze news during this period, even authoritative publications and financial channels were ready to announce a new crisis and a great fall in stock markets. Allegedly, they have moving averages crossed and a golden cross loomed. You need to trust only your analysis. Everybody has a goal, and a news portal has a loud headline, which is already often priced in. Only your analysis, not else. And the third way, buy market. But it's not a clever decision because you can see what you will receive, very bad average price. For example, you are huge capital and you try to buy and buy and buy by market. And what can be the next result of this? Buy an opportunity, here your average price, and if you're huge enough and have a bad price, you will suffer from falling prices. It's clear, yeah? Why? If you are not huge, of course you can buy here, you can stop here and leave this position. But if you are huge enough, of course it's not a way to have a stop losses because you will have such a huge movement and nobody will eat your huge volume. Nobody will buy your huge volume. So it's not interesting for huge capital to have such a bad average price. And we return to this, to those two variations of gathering position. First, it's a range, and second, against movement. It's the main two things what you need to remember and what you need to understand. Okay. And this is the example when you are huge and trying to buy by any price. Excuse me, just a moment. Yeah. So the next picture, I told you a lot of things. I told you two main things: how huge capital can work in the market, but what we can, how we can use it knowledge. Of course, we can realize that we have level, price touch this level, and a good probability to buy here on or to sell here. Yeah, it's clear. But it's not so easy because sometimes happens such situations. Not everything is so cloudless. In the case of range, before price started to rise, 316 level was twicely false broken. Here you need to understand that we are trading probability, not a prediction. And such a situation will be too often. And against movement, it's not so easy to try to catch reversals because gathering position by huge capital against movements can be more longer than you expected, because a lot of traders try to buy here, 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 and at last, while very disciplined, who trust in his strategic, maybe will catch price here. But let's calculate how lot losses you will receive here. -1, -2, -3, and maybe here -4, but I think that if you take quite a clever stop losses, you will be in safe. So -3. And it does mean that your math must be approximately 4 profits and 1 loss in such a way. We will speak about math a little bit later, but trading, speculative trading, it's a very tough math. You need to understand how to work with this math. These statistical losses must be covered by your profits. Okay, next screen. Moment. So, okay, trader needs to know, as I said, that speculative trading, it's a hard work with probability, and it's not a prediction. Probability and math, percentage of winning trades, profit-loss ratio, and quantity of drawdown, it's a key instrument of trading. You need to have a great statistical numbers before you will trade your optimal risks. And the next chart. Now it's clear most interesting theme is entering points. And for me, I'm used two main in my trading. So existing different approaches to trade levels. I'm used, as I said, two main: global key levels and local levels with volatility aims. More detailed we will discuss in the future webinar. But now we will speak about global levels and how to use it. It's my deal using global key level. Other words, global key levels there are some fair price where somebody ready to hold the price. You see very widely range between 108 and 114. Here was entering point, if you see. Why? Because 3 weeks price holding near this level. 3 weeks holds key level 108. Once again, not prediction, it's probability. And first of all, probability for movements. And such approach using global key levels is aimed to capture quite a big movement. It's very useful when you have low percentage of win and you need to receive more profit loss factor to force your math working. You remember, here was entering point, the same level, 108, and with very short stop loss, you can receive quite a big movements. But if you trade key global levels, you need to understand that this price is very strong, that this is clear and strong price level. How to see it? First of all, you need to be more disciplined. You need to wait, maybe 3 days, maybe 5 days, maybe more. But you need to be, you need to see more consolidation before price will go. Reversal often not happen very quick. Let's see at this picture. 1, 2, 3, and then reversal. Here, 1, 2, 3, 4, 5, 6. 6 days before reversal. As a more risky variation, it's an approach when you count global level but using local levels. Minus that local volatility, if the level is not so strong, will be can be multiply breakdown. For example, you see strong levels such this one 70 and entering point here, and for example price rising from this level, and locally you can receive, for example, such a situation. And this situation is more risky than you can buy from 70. Why? Because this is the key global level. It's strong level. Somebody think that price, that here fair price. Local prices can be like this, and you need to be ready for such a situation. Let's look next picture. It's another my deal counting fundamentals of this company. A strong fundamentals in this share. You see earnings per share. I deeply analyzed this company and counting global level near 70, I decided to buy this share on my local picture. It's a 5-minute chart, and you see that near 71.95 we have a very strong level, and it's a result. So you need to remember, if you are trading reports, you must have a good understanding with risk management and money management and diversify your capital. Here, I using not only technical instruments, but also my fundamental knowledges. Another picture, and one more example how to trade reversal using key levels. Look at this chart, 4 days in a row, price holding 2,632. And let's return. You can see a lot of picture the same. As I said, it's almost 2 variation for huge capital, how to gather position. First of all, range, and second, against movement. When everybody try to sell on any price, at any price, you see, dollar yen, target, S&P 500, and here I bought position. It's an entering point. After another try to break the level, we see that seller strength is depleted, and we have a good probability for buy. Because how it happens when a really breakdown will be here. Something like that. Price holding here, and then we see something like that, and then we see strong movement from sellers. But here we can see that something wrong here. Seller trying to sell this price, sell this share, but buyers are still holding here. And we have a clear stop loss area, very short stop loss order, and very good potential. And this is a result of this trade, more than 30 per 1 profit loss rate. Here you can see all my profit targets. So, local trading with counting volatility we will discuss too soon. As I said, today's theme was about key and strategic, maybe global areas, global levels. And let's summarize today's webinar. So, we have 2 main types for trading user levels. First of all, clear range and reversal. Here we have most probability to make math because it's a chance for movement. Movement, it's a part of math, not a prediction. It's only for probability and math. Of course, you need to understand aims. If the trade long-term, and you count fundamentals, it will be your trade from key global areas. For short trades, you need to understand volatility and average numbers. So, this variation range and this variation reversal. It's a 2 main instrument how to gather position for huge capital. And we are speaking about long-term, the long-term position when you count fundamentals, when you can wait maybe a quarter, maybe even 2 quarters. But it's interesting because you pay not so much commissions, and if you have a positive swap, it's very interesting thing. If you are not understand quite enough good fundamentals in instrument or in share, It's a more simplest way to trade short-term situations. But minuses in short-term situations is volatility. If volatility very low, it's not a lot of chances to receive a lot of profits here, or you need to be more attentive in these situations. You need to analyze this volatility. You need to understand every instrument. You need to understand average movements and character of price movement in every instrument that you choose. And entering points. For me, it's two types of entering points decision. As I said, first of all, it's a situation from key level when we have clear range, or when we have falling price and stop near very strong level. This price will be the same, local price will be the same as a global price. And I showed you examples of my deals, how I use it. And another situation, local levels. So we have global level, but we use local level because it's quite often when price touch this level very quickly and became to rise, and then we see this level hold. So it's also very interesting situation. We can use it, and I shown you my deal with target. Let's return to this deal. This is the example of the deal. 70, it's a level, and local, try to buy local situation, and after quarterly report, it was very interesting, almost 8% plus. So you can use any of these two kind of situation, but this kind of situation is more risky, and you need to understand it. Okay. Maybe I lost some practice in English because a lot of times I didn't use it, but with our webinars, I sure and I think that I will try to raise my level of speaking, level of conversational possibilities too quickly. And about webinar. Okay, now we discussed quite in detailed level approach. I hope that you enjoyed this video and it will be useful for you. Your best thanks, of course, a like this video and subscribe to our channel. And all the best for you, and we will meet very soon in the next week, where I will speak for you about trading volatility and how to do it. Thank you so much, and see you.